Hello guys, welcome to Tuesday. Welcome to Tuesday. Uh, CPI day, and it was an exciting day. A day worthwhile of learning, of course. So we at CPI, you can see this huge candle over here. This was around 8:30. It was 8:30. That's when we had the CPI news being released, and from here we have the analogy. We were uh, today. We were for my bias was buy, because generally going back, I was looking today on ES. Going back to the daily, I guess you can remember from the Nasdaq, I had labeled out these levels. Yeah, these equal highs buy side liquidity. You can see them there. But it's today that I'd seen this volume imbalance here. It's an I, not an L. It should be an I. That there's no candle in between these candles over here. The first candle and this candle number 2, there's nobody there, so we call this a volume imbalance. So we were bullish generally. So because ES and Nasdaq move really same, what we can spot here yesterday, these candles low did leave a fair value gap there with these candles high, the one that is these green lines. But if you on ES, I spotted these the yesterday's low and the on Thursday's high. There was no fair value gap. So for me, this was a signal, or showing me higher prices. But Nasdaq had not really shown that, and what happened? A fair value gap was left open. Where are my candles now? Yeah, there is yes, Nasdaq group over here. I guess you can see that fair value gap now clearly. It has not tapped into it yet, so that's why I decided to work on ES today. And what you can see is on the daily chart, we have this fair value gap here. These candles high and this candles low. I don't want to draw it because I'll make this chart so dirty. So you can see how these candles closed off. Let me clear this weekly, because it will take time for us to be price to draw lower. So these candles low there. I'll have to adjust it. And these candles high there. Yeah, that fair value gap. Change the color to slate. Yeah, you can see it there. Visualize it at the back. So sorry guys, sorry. So over here, what we can spot is we had this fair value gap. You can see how price came lower, tapped into it, closed above this fair value gap. This candle opened, came and cleared this sell side liquidity here, daily sell side liquidity, and opened on top of that, then rallied higher. And what did it how did it close? It closed above this candle here. So To me, it was on Friday. This was a huge confirmation that we might be pushing higher, because it has created a change, CISD, change in state of delivery. We might be going higher because it closed above the candle's high. So yeah, and also we can call it an engulfing candle. uh, yeah, but let's not call it. Yeah, there's a yeah, there's a white line. Yeah, should indicate my constant encroachment of that. And also the price had closed above the constant encroachment of that monthly fair value gap. You can see the white line that is closing there as a crossed along that box. Here it is. Let me change the color to black. Yeah, now you can see it there. So that black line is the constant encroachment. So price had closed above it. So this was our draw above these highs to clear that liquidity. Yesterday you did see this candle open and close. It traded down to these candles candles high, creating an immediate rebalance, a clear signal for huge price retracement higher. So yeah, what we can spot is it retraced higher, uh, clearing all that buy side liquidity, draw it into this volume imbalance here, there. The green line crossing there is the constant encroachment. So we shall see how it will close. If it will close higher, we will want to see it, this volume fair value gap support price higher. But let's see how that candle closes. For now it's above the constant encroachment. You can see the green, it's above, even it's outside the fair value gap. Yeah, so yeah, I guess it should act as support for tomorrow's prices, for higher prices. Yeah, and the liquidities that are we have these liquidities, relatively equal liquidities here. Yeah, we have this one because this has been cleared. We'll label this one, but change the labeling. These are buy side liquidity daily buy side liquidity there. And yeah, for tomorrow's price we'll monitor on how that candle closes. You can see it has not yet closed, but that's what we'll be monitoring to see. And dropping lower, I guess, for tomorrow, because we have an inversion fair value gap here, this inversion fair value gap there, and also we have this previous on the sell curve. We had this order block here. Tomorrow, because we are bullish, we'll wait and see how prices would have reacted along these uh, levels here, and waiting to see. So today what happened, we had CPI that really pushed prices higher. Let's see what transpired here. So this was yesterday was consolidating. You can see there. Monday was really consolidating, and we can see candles respecting these order block here, whereby they were tapping into the order block, but the candles were closing above it. So for today, what happened during CPI, market rallied down to clear these liquidities below and tapped into that order block, this bullish candle, then sharply rallied up. Under the 1 hour, yeah, you can see Monday was really a consolidation. That's why yesterday's video, I didn't I was just watching on price. I didn't make a video, but you can see how price was consolidating. Price was just in a range, and then we had this manipulation phase lower to clear this sell side liquidity. It cleared it, tapped into, where did it rally to? This fair value gap here, closed below it. It is high, low, higher, high. We can use these candles as a bullish breaker, these consecutive down close candles. So it rallied down. Let's see whether maybe I should work, I guess, on the breakers, because sometimes I might be referring to the up close candles, sometimes I'm referring to consecutive, the topmost, sometimes I'm referring to the consecutive candles. So I should work on that. So it didn't tap into the the, how can I call it, the constant encroachment of this breaker. It's down close candles, no, and not yet, but it just rallied lower into it. Then during CPI, you can see price rallied higher. So something I have noticed is that sometimes over here, because previously I was looking at this price action, I guess you can remember I had anticipated to see prices rally to the constant and to discount, then buy. But here you can see that really didn't happen. But to where did price retrace to? You can see the 50 level has not yet been tapped into. So here price retraced lower and came and tapped into this down close candle, the up close candle, the last up close candle, because high, low, higher, high, these are breaker, the last consecutive down close candles. Yeah, let me reduce the intensity. Yeah, you can see there how price came tapped into it first time here, and again rallied higher. I guess now the constant encroachment, or it's because we are really bullish. I don't understand the analogy, but I guess I'll try to find a way. You can see now here using this price leg higher to that high. You can see yeah, there you can see price retraced to acted on this breaker, retraced higher above the premium level. I guess on the 30 minutes chart we can try to find we had these this fair value gap with an order block there. Price acted well on that order block. You see candles closing there, then sharply rallied lower at around New York on Monday. New York open, reacted off, took this sell side liquidity below this low, then rallied higher to clear these buy side liquidity over there, and this was lunch AM lows and lunch lows. They were cleared, then rallied to take the AM highs. Then the market consolidated all along until today, when the market rallied lower, traded to, let's see, these candles high, candles low. Can see it dipped into discount over here, then sharply cleared the sell side liquidity below here, these underlying sell side liquidity. It cleared it and then rallied up higher. So back to the 1 hour chart. Yeah, around 9, I was watching price around 9:30 to PM, AM, both AM session and PM session. And so around that zone I saw these I wanted to see a confirmation that we might be going lower. So I waited for, I guess in the 5 minutes chart. Yeah, I was here. I saw price consolidate over here. Price was consolidating there. Then at around this point, we had this huge candle and a huge down close candle again, making this price action balanced. Okay, so we are still in this range because it's balanced. We assume maybe over here we have we assume these candles because we have balanced price action range there. Then these candles were playing around the constant encroachment. Were how do we call these creating, these candles were creating around this, closing and opening around this constant encroachment. Then I spotted this bullish candle. I was keen on this bullish candle. Then this candle, this next candle rallied up, cleared this liquidity above these highs, and then came lower and closed below this bullish candle. So I was watching to see price retrace onto this order block. By the sometimes I've seen, as I was backtesting and seeing, sometimes you can see a retracement higher to touch the open of this order block, but sometimes it can just leak it and then rally down, and that's what happened. I guess I was, let's see, my entry was not tapped into because I entered at the low of this fair value gap here, the 3 minutes fair value gap. Okay, and there's something I have learned with my stop loss was above that daily fair value gap. I guess you can remember it. Yeah, so here my wasn't filled. You see, wasn't filled because I wanted to see price retrace into this fair value gap, then rally lower. It rallied lower, but if we were to be in that trade, TP was not hit, then market started repricing higher. And something I was saying I have learned is, in you can see in a given time frame a fair value gap has been created. But for instance, here is our entry. Okay, we have a fair value gap, a 3 minutes fair value gap there, but here we have this balanced price range there. Okay, so I would have been keen, or next time I will be keen to see if a candle closes and my bearish maybe has fully confirmed. So I'll enter my trade once the market, this candle, retraces higher. Okay, you can see how This daily fair value gap acted as a resistance to prevent prices going higher. Price tapped this candle tapped on that low of that fair value gap, then sharply rallied lower. It was a 1 to 2 trade, but we were not tapped in, nor was it tapped out for the first. So here the second time we had these move higher. I was looking at something. So price rallied higher, creating no fair value gap, came here, made these down close candle. This candle closed above it, you see, and this candle it traced lower, this bearish candle, but closed above this fair value gap. So some extent these are confirmation that we are bullish to our discount level, because I was in a sell. Okay, so using that low, I can anticipate to where am I expecting to see a retracement to. So here at around this zone, price drop lower. I can guess yes, using this order block as a support, then rallied higher, then rallied lower again, utilize the OB as a as a as a support for price to go higher. It went higher, then this fair value gap now, our entry is now, we have been tapped in. Then you can see this lower move. I was keen on this move lower. You can see I had seen this down close candle react off this. I guess you can see this brown, this box there is a 15 minutes fair value gap. Yeah, over here these candles low, this candles low and this candles high. This was the fair value gap I was watching. You can see how this candle closed, but it had been fully filled. It closed at the constant encroachment. Then on the 5 minutes chart, you can see this candle fully engulfed this candle here, and another candle had formed. So I dropped to a 3 minutes chart. I entered. You can see what I was explaining before. So this entry was exactly at the low of the bullish candle I entered. So we were tapped in when prices rallied up with this candle, tapped into both the low and also the close there, rallied shortly higher, then sharply rallied down, and it rallied down but never hit our TP. As you can see, our first trade TP was hit. So this, we had one TP hit. So this other one with my 1 to 2, 1 to 4, and this 1 to 4, that coincident they were the same. So yeah, you can see here my TP wasn't hit but rallied higher and took my stop loss. My stop loss was hit. Yeah, so something to learn from this is or something I wasn't keen on. My stop loss should have been on these high, these fair value gaps high, targeting my 1 to 2. Yeah, I could have been taken if I was keen with my stop loss. But yeah, well and good, we have learned. Now to analyze, let's clear how the market behaved. You can see the market tapped into this bearish order block, then rallied lower, creating a fair value gap there, cleared these and uh, the lunch lows were cleared, then the market rallied up. You can see how the session liquidities are being engaged and how market reverses. So immediately these lunch lows were cleared, we had these shift from bearishness, because yeah, we had this shift higher, went and cleared these lunch highs, also rallied up to clear these AM highs. So the AM highs have been cleared, and now the market has rallied lower. As we can see, the market is rallying lower. So those were the two trades. I guess one TP was hit, but the other one stop loss was hit, and I guess my stop loss placement was not at that 100%, but it was a fair trade, a good trade. You can see these sharp movement higher, and these candles, you can see how these candles never closed below this candle, so rejection block there obeyed these candles never closed below this one, but we have clear liquidity there that should be grabbed. So liquidities around here were taken up, been engaged now, and the market can retrace lower. So reading the price action over here, if we were to be in this buy, how would have we read price? You can see on the 5 minutes chart, the rejection block had been respected, so price rallied higher and closed above this volume imbalance, the inversion volume inversion fair value gap closed higher, went higher, cleared these liquidities over there, and let's see on the 1 minute chart what really happened. So price rallied, we had this high that was cleared around this zone. Another block was created, price rallied higher, was tapped into, rallied higher, creating another fair value gap, that order block, I mean, that respected this other order block, never closed below it, closed above, above. Then we had this rally up onto that AM highs. You can see over here we had these price action here, our candle closing around that zone. You can see how they were opening and closing, clearly rallied down, then rallied up. If we go to the 3 minutes, we can see clearly it rallied up to this fair value gap, then a sharp shift lower into this order fair value gap again, for paired with this order block. Then we had this sharp movement lower, that sharp movement lower, but since it's about to, since we had two trades and it's about close time, so there's no need, we'll wait for tomorrow and see what price got for us. But since tomorrow we are bullish, let me clear these stuffs, make the charts. So tomorrow I want to see how the candles play overnight. we shall be utilizing a fair value gap. This 4 hour candle here we shall see, and also this daily fair value gap will be our pointer. We shall be watching price, and of course we are targeting higher prices. We are targeting high prices to these liquidities, yeah, these blue zones over there. So until next time, asanteni sana, and back to Sheng. I'll be teaching na washukulumbu tula na washukulumbu tula. Yeah, that's our slang over here. She calls Shembeteng, but thank you so much for being here. Asanteni sana. Until we meet again, let's see what tomorrow got for us. I guess tomorrow's news, we'll check it out, and until next time, I'll be changing this to white. Yeah, until next time, guys, be safe. We'll check it out tomorrow, so be safe, guys. Yeah, concerning the monthly, just look at that monthly inversion fair value gap. The previous week's candle closed above it, and uh going back to the daily, something we can see this market structure shift over here. These highs have been taken, and the candle just closed above it, this candle. So a confirmation from the higher time frames that these are a reversal, like we going higher. Okay, so we'll be bullish. We'll be looking for the expansions higher. Okay, so until next time, guys, be safe.